With Bitcoin, Strategy, and STRC all under pressure, Michael Saylor was supposedly days away from triggering a Bitcoin death spiral. Then Strategy dropped its announcement this morning, and it did just about the opposite of what the doomers swore was coming. And while everyone's been locked on a red screen, a much bigger picture has been taking shape behind it. There's a real theory going around that the US government is already buying Bitcoin without telling anyone. There's a clock running on the AI bubble that almost nobody is watching. And underneath all of it, a monetary endgame that only comes into focus when things look their absolute worst. Today we step back and look at the whole board. This is Truth Block. I'm Hurley. Let's mine truth. Real quick before we dive in, a big chunk of you watching right now are still not subscribed. If this channel helps you keep your head while everyone else is losing theirs, do me one favor and hit subscribe to Simply Bitcoin. It's free and it's the easiest way to support the show and the peaceful Bitcoin revolution. All right, let's get into it. Bitcoin's consolidating around 60K, down about half from the highs, and this is the weakest it's felt in 4 years. Gold, silver, and Bitcoin have all sold off big this year, and we just lived through the biggest month of money leaving the Bitcoin ETFs since they launched. The pain is definitely real, but pain and damage are two different things. Michael Saylor, one of the best liquidity analysts alive, said it this week. The debasement trade isn't dead. The timing is just being tested. The long-term demand for hard money, the thing that protects you from the printer, is fully intact. The short-term tide of global liquidity is going out, and when it does, Bitcoin gets sold off with everything else. But none of that touches the reason it exists. The thesis didn't break. The clock just got longer. Hold on to that because it's the key to everything else today. Which brings us to the thing everyone is actually afraid of, the death spiral. We covered this in the last episode, but I'll recap it quickly here. The fear is simple. Bitcoin keeps falling, Strategy gets cornered, Saylor gets forced to dump hundreds of thousands of coins to survive, and that selling feeds on itself until the whole thing caves in. Well, this morning, Strategy answered. They rolled out a new capital framework, and the headlines ran straight to the scary version that Strategy authorizes selling Bitcoin. And yes, that part is true. There is now a program on the books that lets them sell Bitcoin. I'm not going to dance around that. But read the actual filing and you see a company digging in. They've built a cash reserve of about $2.55 billion, more than 17 months of covering their dividends and interest, with a hard rule never to let it fall below a year. Add the rest of the plan and they're sitting on close to 26 months of breathing room. They also raised the STRC dividend to 12% to defend it, and they authorized $2 billion to buy back their own securities while they're trading cheap. Forced sellers don't go build a 2-year war chest and start buying back their own paper at a discount. That's a company playing offense. Adam Livingston ran the numbers on the move itself. This week's Strategy raised about $1.15 billion in cash by issuing stock. They bought 0 Bitcoin with it, and the amount of Bitcoin sitting behind every single share still went up. So did they buy Bitcoin is now the wrong question to obsess over. The right one is whether shareholders ended up with more Bitcoin behind every share, and this week they did. It's really hard to argue with how BitPain put it over the weekend. The only way Strategy fails is if Bitcoin fails. For Saylor to actually blow up, Bitcoin has to fall to around $20,000 and stay there for years. And if that ever happens, Bitcoin has already lost and nothing else matters anyway. So when somebody tells you they're betting against Saylor, what they're really telling you is they're betting against Bitcoin. So hopefully that's the Strategy death spiral put to bed. Whether you're Michael Saylor or you're just stacking sats on a Tuesday, the people who make it are the ones who never have to sell at the bottom. That's exactly why I use Ledn. Life happens, bills come due, and the worst move you can make is dumping the Bitcoin you fought so hard to stack just to free up a little cash at the bottom. With Ledn, you borrow dollars against your Bitcoin instead, so you keep every coin and all the upside while you get the liquidity you need. Ledn has been at Bitcoin-backed lending longer than just about anyone, and they're refreshingly straight and honest about how it all works. So head to learn.ledn.io/simply to learn more. Now, why would any government or company want to corner this much Bitcoin right now while it's getting hammered? To answer that, you have to stop thinking like an investor and start thinking like a nation state. Joe Consorti laid it out on TFTC last month.
And so really, it is the only solution. It's the only emergent financial technology that works as a neutral settlement layer in an increasingly trustless and fractured world order. And so pair that with what the United States has been talking about lately, like even setting aside the American Reserves Modernization Act, which is extremely cool, You have Pete Hegseth saying that Bitcoin is of immense geopolitical importance, and we need to, we need to adopt it and embrace it before China does, before Russia does. Like, sort of the two different angles of Bitcoin here. For the everyman, it's a hedge against perpetual fiat debasement, money printing, them stealing your time, them stealing your energy. But for sovereign nations, like it's something you need to accumulate out of geopolitical strategic importance. Think about this from the United States perspective. BRICS is a total failure, complete and total failure. Like the leaders in the BRICS nations are trying to kill each other, not ideal, right? So what do you need in that environment? Like gold simply does not work as a settlement asset when you have high frequency, high volume global trade, but Bitcoin does. And you pair that with the trustlessness factor, then Bitcoin fulfills that role even better. And so all of a sudden, among all of those nations, they're slowly but surely finding the currency that actually works for what they're looking to do, which is creating a sort of secondary global economy, like an Eastern global economy that isn't reliant on Western consumers. If you're the United States and you see that happening, are you going to sit idly by and let them accumulate a ton of Bitcoin and, push you out of the system? Or are you going to use your world reserve currency status as the pawn in order to use your balance sheet's strength, your strength as a creditor globally, in order to accumulate a lot of Bitcoin before they can and make it prohibitively expensive for them to create this separate system that pushes you out of your global hegemon status, right? I would say the former, right? I would print a ton of money to buy Bitcoin to prevent them from doing it before me.
For you and me, Bitcoin is a shield against the printer. For a government, it becomes something you have to own or lose. If your rivals are stacking a money nobody can freeze or seize, and you sit there doing nothing, one day you wake up locked out of the new system looking in. Consorti points to Pete Hegseth, calling Bitcoin a national priority and stressing the US needs to get it before China and Russia do. When the Secretary of Defense is talking like that, the race has already started. And it isn't only about who's buying. We've talked before about how stablecoins are quietly becoming the new dollar system, and how that road has to run through Bitcoin eventually. Matt Dines, a fixed income guy who used to do this for a living, takes it one step further on the latest What Bitcoin Did podcast. He points to the exact moment the whole thing breaks and forces the issue.
Well, at some point, if your stablecoin, money supply is bigger than the $100 trillion or, multiples of that's in this offshore dollar system, and you're backstopping with treasuries, eventually you need something else to repeg your stablecoins to. Yeah.
This was going to be my question, because I see the transition that you're talking about from the petrodollar to this onshore dollar system that's stablecoins backed by treasuries. What I wasn't sure is where Bitcoin plays a part, but this is where Bitcoin plays the part.
Well, so think about this. So what happens when stablecoin supply increases? And this is why I go into CoinMarketCap or whatever, like the majority of liquidity is in, right now it's old Tether, USDT. Another key highlight, we talked about the executive orders, the 2024 elections, the fork in the road in monetary history. I want to say, was it December 2023 where Tether made the announcement that they were cooperating with, I want to say it was the FBI for enforcement of the United States Treasury's OFAC sanctions. That was a huge tell. Now Tether is on board with what was happening when we talked about the United States, the American capital base moving in one direction, and over the 2010s. That event, and I don't know, Tether guys, I've never met them. I don't have any inside information, but looking in hindsight, that announcement from Tether, which preceded, I want to say, the election result, that was a huge directional tell that they were going to cooperate with this new version of the dollar that was being pushed through. So if you think about that quote, right? 2020 taught us like nothing stops this train. Like we're all stuck in this mindset that this whole system is still running on the architecture, the blueprints, the players involved, the incentives. It's just what we saw in the past. Like, we had 2001, then 2008, then 2020. We're just going to get more QE, more ZERP, more stupid fiscal spending from Congress. The game has changed, and it's very clear. All of the players who, were cooperating around this old business deal, that lasted for 75, 80 years. Maybe it's too far to say they're at war with each other, but they're not seeing eye to eye, and they're definitely not cooperating anymore. And the U.S. is definitely now asserting itself on the international stage and not just geopolitically, what we've seen during 2026, but it's now an extended story, like that they're asserting themselves in the international capital markets arena, which is just one plane, right? Capital markets are war by another means. So when we say nothing stops this train, right? It's like, well, there's another train, and it's like, that's what Scott Bessent represents, all of that. So we'll see how this plays out.
What's interesting is this goes deeper than the stablecoin to Bitcoin thread we've pulled on before. Dine's real point is about what kind of money the new system runs on. Think back to when the dollar was a claim on gold. If the government printed too much, that paper could be turned in for real money. That convertibility was a leash. Well, the US cut that leash back in 1971, and we've been paying for it ever since. Now look at the two roads in front of us. One is the CBDC, or the central bank digital currency, where the base money sits behind a wall. You need permission to even touch it, and there's no exit and no leash at all. The other lets the public hold the base money directly and redeem into something hard. That second money is Bitcoin. So if the Treasury really does pull Bitcoin underneath the dollar to keep the system alive, they hand every one of us a leash on their own printer. The system you thought was permanent gets swapped out underneath you, and the new tracks lead somewhere the old guard can't fully control. Now, if you're paying attention, you should be asking the obvious question. Why would the US government ever build a system that leashes its own printer? That control is their whole power. Why hand any of that away? And the answer is that they're cornered. Go back to what Consorti said a minute ago. If America sits still while the rest of the world races to stack a money nobody can freeze, the US loses what it actually cares about: control over the global financial system itself. So Washington's real choice comes down to this: give up a little control at home or lose the entire board overseas. Faced with that, they trade the small monopoly to protect the big one every time. Washington likely thinks it can have it both ways: scoop up more Bitcoin than anyone, keep it on a short leash, and let the dollar keep riding on top. But you can't adopt the money that disciplines you and somehow stay undisciplined. They believe they're using Bitcoin to save the dollar. What they're actually doing is legitimizing the very thing built to replace it. You can't co-opt what was designed to outlast you. You can only speed it up. Which brings us to the theory we teased up top. The one Marty Bent floated with every tinfoil hat warning attached.
One of my favorite theories out there. I'm not saying I believe it. I think it's plausible, but that strategy is the strategic reserve. If you wanted to
tinfoil hat,
play a geopolitical game theory game, and you didn't want to tip your hat to your adversaries about your accumulating the way in which you're accumulating Bitcoin. You have a company in the public sector, the private sector, via a public equities vehicle, accumulate as much Bitcoin, and it'd be like 1.5 days of QE right now, as it was back in the 2009 to 2015 era.
Crazy. Well, I mean, hey, Tyson's Corner is very close to DC, so who knows?
Right, but to the point, like it is becoming more geopolitically important to consider Bitcoin as a strategic reserve asset.
Now, I want to be careful here, the same way Marty was. This is still a theory, but here's why it's worth taking seriously. You don't even have to assume any of it's secret, because this administration is already doing the open version right in front of us. Last year, they took a 10% stake in Intel. They took a piece of MP materials for rare earths, stakes in lithium, stakes in mining, one strategic industry after another. Taking an equity position in critical American companies is already the playbook. So ask yourself, what's more strategically important right now than the largest Bitcoin treasury company on Earth? Washington wouldn't need some secret operation to pull this off. They could just buy a stake in Strategy and let Saylor keep doing what he does best. So whether Washington is doing this on purpose through Strategy, or Strategy is just front-running where the whole world is headed, the board looks the same. You've got the issuer of the dollar quietly long Bitcoin and effectively short its own currency. That's a speculative attack on the dollar run by the people who print it. Okay, so we've got the why, now the when, because this is the part you can actually act on. The one big thing standing between us and that endgame is the AI trade. For the past year or so, every spare dollar that used to flow into Bitcoin has been vacuumed into AI instead. So how much longer does this last? Peter St. Onge, an economist who actually traded through the dot-com bubble, gave the cleanest answer I've seen.
The main determinant of a bubble, it's not price multiples. Okay, it's not, price to earnings, price to sales. It's not how much it went up. Okay, it's none of those things. It's not magnitude. It's just time. Time passes, eventually the bubble goes out. There is no other determinant. If you're looking at AI, okay, did it go up a lot compared to 2 years ago? Yes, all of it did. NVIDIA, Broadcom, whatever. What's the one now? Marvel, Micron. Okay, you keep having this rotating cast of guys who go up 10x, exactly like .com. Did it go up a lot? Yes, it's a bubble in that sense. However, number one, if you look at the valuations compared to .com, they are far lower. I mean, we'd have to go up probably 2 to 4x from here to even get close to .com, because in .com, it was all vapor. All right, if you look at the actual earnings, like NVIDIA is minting profits, like profits you put in your pocket. Okay, this is not eyeballs. This is not, the kind of hokey metrics that they come up with .com, because nobody was turning a profit. In fact, I think internet stocks as a group did not earn a single dollar throughout the entire 1990s, right? They all lost money, and they were all like, no, we got to reinvest because we got the eyeballs are coming. So my takeaway on it is that, number one, is it a bubble? Well, yes, it went up a whole bunch. And I would not be shocked if it dropped in half at some point here. Okay, so in that sense, yes, it's exhibiting bubble behavior. But in any bubble, the question is, how long will the bubble go, right? Are you in the first 10% of the bubble? Are you in the last 10% of the bubble? Are you somewhere in between? So if you overlay the AI semi-bubble just day for day, the reason you're doing day for day is, remember that study, right? It's just time, it's nothing else. If you lay it day for day on the .com, you got to decide when you need to start them. So call it Netscape IPO versus ChatGPT release. Okay, if you overlay those, we're probably 98, arguably early 99. I think we've got another year or a year and a half of free money. Watch it blow up tomorrow. But anyway, I think most likely, if I had a gun to my head and I had to guess, we got another year and a half of free money, probably scale out gradually, because otherwise you're going to lose all the money like I did when I was young. So scale out gradually over time. But, so to answer the question cleanly, I think, yes, it's a bubble, but it's got another year and a half to go.
What's interesting about this timeline is that 3 completely different clocks are all pointing at the same window. Gold just made its big run in 2025. And its own history says it goes quiet and trades sideways for about 12 to 18 months before the next leg up. And Bitcoin's own cycle points to that same stretch before it makes a real run back towards the highs. So that's 3 different assets, 3 different reasons, but one window. And when that AI money finally goes looking for a new home, it won't sit in cash that melts a little more every year. It rotates into the scarcest, hardest, and most neutral asset on the board. It rotates to sound money. And look at what we're being handed while everyone panics or waits for the bottom that may never come. By the power law model that's tracked Bitcoin for its entire life, this is the deepest discount to trend we've seen since the bottom of the FTX collapse back in 2022. Think about how strange that is. A pro-Bitcoin White House, the ETFs, the Treasury rebuilding the dollar around this thing. Every fundamental we ever asked for is finally here, and the price is sitting in peak despair. The setup looks broken because this is exactly how the best ones always look. Everything we just walked through today only pays off if you actually own your Bitcoin. Your own keys, real self-custody, the kind nobody can freeze, seize, or print around. And if that still feels intimidating, that's exactly the gap the Bitcoin way closes. The Bitcoin way will sit with you one-on-one and walk you through getting set up the right way. Self-custody, security, inheritance, going fully sovereign at whatever pace you're comfortable with. So visit thebitcoinway.com/Hurley and you'll get a free 30-minute consultation to get started. All right, let's bring this one home. The price says Bitcoin is dying, again. And everything happening underneath it says the opposite. And that gap, right there, is where the opportunity is hiding. Larry Lepard said it best over the weekend. Bitcoin is a revolution. For the entire history of the world, we never once had a money that couldn't be quietly printed and watered down while we slept. Now we do. That's what this is actually about. It's about freedom and fairness and a whole lot less war. It's about finally getting an honest measure for an honest day's work, for the first time in any of our lives. A long, ugly bear market doesn't break that. It just finds the ones who actually believe it. So don't be that person who forgets why we're here and sells the bottom of a revolution because it finally got hard. We don't do summer soldiers around here. We do the work, we keep our conviction, and we stay in the fight. All right, 2 questions for you. Do you think Strategy is just a company managing its balance sheet, or is it quietly the US government's Bitcoin reserve? And a time like this sorts everyone out. So which one are you? A summer soldier, or the one still stacking when it's this ugly? Let me know in the comments, and if you enjoyed this one, don't forget to like the video and share it with somebody who isn't seeing the long thesis. And subscribe to Simply Bitcoin for more high signal videos every day. Thanks for watching. I'll catch you on Thursday.